If you think the Iraqi dinar story is old news, stick with me for the next 22 minutes. What I am about to explain could change how the IQD moves against major currencies this week, and it affects savers, traders, businesses, and families who rely on currency stability. Today is January 11th, 2026, and the market is digesting a set of official and unofficial signals that together create a unique, time-sensitive window. I'll walk you through what just happened, why the central bank's budget exchange rate matters, what people mean when they talk about an RV, how the so-called COUNTERACT rate works in practice, and the realistic paths the market can take in the coming days. I will keep this simple, practical, and focused on what you can do right now to protect money and spot opportunities. Expect clear scenarios, plain explanations of technical terms, and concrete watch points you can track over the next week. At the end of the video, you will understand not only the headlines, but the mechanics, the likely short-term market moves, and the everyday implications for remittances, prices, and portfolio decisions. Please like and subscribe if this helps you, and leave questions below so I can answer them in the comments or a follow-up video. Start with the basic signal that set things in motion. The government's 2026 budget process shows the central bank using an official exchange rate that is different from the street market price. That kind of official figure is not just bookkeeping. It tells banks how they will settle government transactions, and it signals how the central bank intends to manage liquidity between state accounts and commercial banks. When markets see the state committing to a particular official rate for budgeting, traders update their models for how much foreign currency the state will buy or sell, how much pressure will exist on the banking system, and how likely policy steps are to follow. If the official rate is moderately stronger than the unofficial street rate, it can be interpreted as support for the dinar and a sign that authorities want to reduce downward pressure. If the official rate is weaker, it can be read as tolerance for depreciation. For the coming week, that budget rate acts like a magnet. It pulls price expectations toward it, and every trade in the interbank and gray markets will be measured against that anchor. The existence of an official anchor reduces uncertainty for some players while increasing it for speculators who count on a surprise revaluation. Now, let us unpack the phrase counteract rate. This is not an arcane monetary policy term so much as a practical description of a short-term operational price used by the central bank to manage flows. In practice, the central bank may buy dollars from the ministry at one rate and sell to commercial banks at another. The small spread covers transaction costs and gives the central bank room to inject or withdraw local currency liquidity. When people say the counteract rate, they often mean the specific buy-sell points that the central bank and ministry use in day-to-day operations. That mechanism can smooth shocks by letting the public sector act as an internal market maker for a limited volume. But it also means the public sector is directly influencing the local market price. If policy actors widen that spread or adjust the official number even slightly, it changes the profitability of holding dinar versus dollars for traders and can trigger fast price swings in the parallel market. Over a single week, these operational choices can produce measurable moves in exchange desks, forex kiosks, and banks, because they change the expected flow of dollars into and out of the banking system. Next, what people mean by RV is revaluation. In the dinar community, RV is shorthand for a significant change in the dinar's official value relative to the dollar. Revaluation can be a formal redenomination or a policy-driven realignment of the official peg or managed rate. It matters because a genuine government-led revaluation would, by definition, change the official exchange rate used for budgeting and large transactions. But revaluation is different from the day-to-day market moves driven by speculation or short-term liquidity. An actual RV is a structural event. It typically requires broad fiscal, monetary, and institutional readiness. For the coming week, the difference between rumors of an imminent RV and concrete, implemented policy steps is critical. Rumors can move prices quickly as speculators push the unofficial rate to test whether the authorities will respond. If authorities show no sign of confirming a revaluation, or if they reinforce the current official anchor, Speculative pressure can reverse quickly and sometimes violently. Understanding that distinction, rumor-driven moves versus policy-driven revaluation, is essential to making calm decisions this week. Put together, a fixed official budget rate plus chatter about an RV creates a very specific mix of incentives. Traders who believe a revaluation is coming may try to buy dinar now in the hope of selling later at a higher official conversion. Banks and importers, meanwhile, think about covering dollar needs for imports, payrolls, and settlements. If the official rate for budgeting in government transactions is set at a figure that is modestly stronger than the street price, it reduces the potential upside for speculators and narrows the arbitrage between official and unofficial markets. Conversely, if the official anchor is higher than street price, it signals possible appreciation and invites speculative positioning. For this week, watch how institutions adjust their net dollar exposure. Are banks accumulating FX reserves on their balance sheets, or are they selling to meet commercial demands? The direction of that flow will often predict short-term price moves in the informal market because those flows determine whether supply or demand dominates at local exchange points. Let us talk about immediate market reactions you can expect and why each one matters. First, volatility spikes. When the market sees conflicting signals, traders shorten time horizons and widen bid-ask spreads. That increases transaction costs for everyone. Second, divergence between official and unofficial rates tends to grow during uncertainty. That divergence can create two separate realities, one for official accounting and one for cash-in-hand street transactions. Third, asset classes that are priced in dollars, like oil and imported goods, react to dollar strength. If the dinar shows signs of strengthening on the official channel, there may be limited downward pressure on local import prices, but the effect is often delayed. For the next 7 days, the most immediate takeaway is that retail buyers seeing a sudden improvement in exchange quotes should be cautious. Short-term moves can reverse. For businesses and households making remittances, timing the conversion matters and can save or cost material sums. For traders, watch volume as well as price. Low volume as well as price. Low volume rallies are risky. How this affects the global FX context matters because the US dollar is the world's dominant currency and regional flows find their way into local markets. If the central bank's budgetary rate signals a tighter domestic stance, it could make dinar assets relatively more attractive. If instead the official rate is seen as unchanged and the rumor mill about RV accelerates, offshore speculators may attempt to front-run any formal announcement. International banks and correspondent relationships are also watching liquidity and compliance signals. If banks abroad see a steady, government-backed exchange policy, they will be more comfortable handling transfers in trade finance. If they fear sudden policy changes, they may restrict flows, which tightens dollar availability locally and pushes the unofficial rate wider. For the week ahead, any changes in correspondent bank behavior or international bank communications can amplify movements in local markets. So, keep an eye on trade finance activity and large corporate transfers. Now consider the mechanics of how a small official shift can produce outsized reactions. Imagine the central bank moves the budgetary rate by a modest percentage. That change affects the conversion price of government oil revenues, which in turn affects the official dollar inflow into the treasury. If more dollars are offered to the market at a slightly stronger official price, domestic banks have an easier time securing FX for clients. That can reduce panic buying at street kiosks and bring the unofficial rate closer to official levels. Conversely, a tightening of official FX distribution can create scarcity, and scarcity breeds volatility. Because the dinar is not freely traded on every major international FX platform, local supply dynamics matter more here than for fully liquid currencies. In short, small operational changes by the state can cascade through liquidity channels and produce rapid movements this week. Let us look at the real-world implications for ordinary Iraqis and the diaspora. If you are sending money home, or if family depend on remittances, short-term swings can materially change household budgets. A stronger dinar on official channels does not always translate immediately into better buying power at the market level. Exchange kiosks and cash dealers operate with their own inventory and risk calculus. If the unofficial market sees rumors of revaluation without official confirmation, kiosk sellers may widen spreads to protect against a sudden policy reversal. That means that even if headlines look positive, the practical effect for a family buying goods or paying school fees may be limited for days. For the next week, remitters should compare rates across banks and accredited transfer services, and consider spreading transactions over a few days to average the rate if volatility is high. For traders and speculators, define a clear exit strategy before you enter a position this week. Speculative moves during an RV rumor phase are a classic example of a high-risk, high-volatility environment. If you buy dinar on the unofficial market hoping for a quick paper gain, you must have a clear plan for how and where you will convert back to dollars. Liquidity dries up fast in volatile markets, and you can get stuck holding local currency at a price you did not anticipate. Use strict stop-loss rules and prefer smaller position sizes. For longer-term investors who believe in structural revaluation, consider the illiquidity and conversion risks. The path from rumor to policy to implementation can take time and might not result in the price outcome you expect. This week could offer trading opportunities, but it is equally likely to produce whipsaw moves that hurt undisciplined traders. Banks and formal financial institutions are central to how this story plays out. If the central bank engages in targeted operations, such as buying dollars to support the dinar or selling to stabilize prices, it will affect bank reserves and lending capacity. That, in turn, can influence domestic credit conditions and interest rates. For example, selling dollars to reduce the dinar's volatility may increase dinar liquidity and put downward pressure on short-term interest rates. Alternatively, if the central authority chooses to hoard dollars to shore up reserves, that removes local liquidity and could raise money market rates. Over a week, these operational decisions are quick to signal future policy direction. Watch for official statements regarding reserve levels, FX auctions, and bank communications about funding availability, as these are often the clearest indicators of how the authorities are managing the situation. Commodities and trade prices will also feel the short-term effects. Since oil is priced in dollars, any shift in the dinar-dollar relationship affects domestic revenue calculations, fuel pricing, and broader import costs. If the official budget rate is set to a figure that strengthens the dinar in accounting terms, the government's effective revenue may look larger in local currency terms. That could free up fiscal space temporarily. On the other hand, if the budget rate is weaker than the market expects, importers may face higher dinar costs for dollar-priced goods, and these costs can be passed to consumers. For this week, industries with high dollar exposure, like manufacturing and fuel distribution, may adjust pricing or delay purchases until they see a clearer trend in exchange rates. Now think about psychology and sentiment. Markets do not move on numbers alone, they move on perception. A consistent, credible official narrative from the central bank reduces fear and speculation. Mixed messages or silence, however, allow rumors to dominate. In a compressed time window such as a single week, sentiment can flip quickly. If influential market commentators amplify revaluation rumors and traders see a brief rally in the unofficial market, fear of missing out can pull in more buying. But if policymakers respond with a calm, transparent explanation of their approach and confirm the official anchor, sentiment can normalize and earlier gains can evaporate. This tug-of-war between rumor and policy clarity is a primary driver of short-term volatility, and it will be central to everything that unfolds this week. Let us walk through 3 realistic scenarios for the coming 7 days so you can plan. Scenario A, the authorities reinforce the official budget rate and provide clear operational details on FX distribution. In that case, speculative upward pressure on the unofficial market is likely to cool, volatility eases, and the unofficial rate drifts closer to the official anchor. Scenario B, authorities remain silent while rumors build. This invites aggressive speculative buying and could produce a sharp but fragile rally in the informal market. Expect large intraday swings and wide bid-ask spreads. Scenario C, an unexpected operational move, such as a targeted FX intervention or small formal revaluation announcement, would produce a rapid repricing but could also be tightly controlled and limited in scope. Each scenario carries different implications for remittances, corporate imports, and trading strategies, and it pays to decide in advance which scenario you expect and how you will act. Now, practical watch points for the next 7 days. Monitor official communications from the central bank and the Ministry of Finance for statements on the budgetary rate and FX operational plans. Track interbank transfer volumes and the spreads used in official transactions. These operational spreads are a direct signal of supply and demand. Watch the informal market trading quotes in major cities and online forums, but treat them with caution. They can be noisy and manipulated. Keep an eye on large corporate transaction announcements and any changes in bank transfer speeds, as these can reflect shifting dollar availability. Finally, check liquidity indicators such as ATM dollar availability and local importers' behavior. Any sudden hoarding or delays in importing goods are often the first sign of real structural pressure. From a risk management perspective, protect your core savings first. If you rely on exchange to fund living costs, consider splitting conversions across days to average the rate and avoid bad timing. For businesses, use forward contracts or formal banking hedges where available to lock prices for critical imports and payrolls. Individual traders should cap exposure and use limit orders with strict stocks. Do not chase rallies driven by rumors, and avoid accepting offers that sound too good to be true. Fraud and scams increase when market excitement spikes. If you are using informal channels, double-check counterparty credibility and do not move large sums without established relationships. The first priority is to safeguard essential funds and cash flows. Now we should talk about liquidity and conversion channels. The gap between the official budget rate and the street price exists partly because of how easy it is to convert dinar back to dollars. Formal banks and license exchanges provide more secure conversion but often apply compliance checks and limits. Informal markets may offer immediate access but at higher risk and wider spreads. For those planning any sizable currency movement this week, the choice of channel matters. If you rely on fast, large conversions, use formal banks with clear documentation. It costs more but reduces conversion risk. If you're managing small amounts and can tolerate some spread-controlled transactions through reputable exchangers may be fine. Remember that in a volatile week, capacity constraints can materialize. Expect longer processing times at banks and occasional limit orders being filled slowly. Let us address how international perceptions feed back into the local market. When foreign investors see a stable, institutionally backed policy, they are more likely to route trade finance and capital through the banking system, improving dollar supply. If international news amplifies revaluation rumors without evidence, foreign banks may signal caution and curtail certain services, which reduces dollar availability and strengthens the unofficial dollar price. That feedback loop works fast in a single week. Therefore, local actors should watch for statements from international banks and financial institutions, as well as major economic news that could change global dollar strength. A stronger global dollar can put pressure on the dinar regardless of local policy signals, while a weaker global dollar can ease pressure. Now, some notes on timelines and expectations. Policy implementation is rarely instantaneous. Even when a government wants to change rates or conduct an RV, it takes days to coordinate bank systems, clear legal steps, and communicate procedures to the public and to international partners. So while markets can move within hours on rumors, real enforceable policy changes usually require more time. For the week ahead, treat any hints of policy change as that. Hints. They raise the odds of movement but do not guarantee a durable outcome. Plan your actions with that lag in mind. If you are considering a portfolio shift based on hopes of an RV, remember that implementation timelines and conversion mechanics are the key risk factors. Let us be clear about long-term fundamentals versus short-term speculation. Iraq's economy, oil revenue flows, foreign reserves, and political stability are the structural factors that determine the dinar's value over months and years. Weekly moves, driven by budget rate announcements and revaluation chatter, are largely sentiment-driven and operational. If you are a long-term investor thinking about economic fundamentals, watch for structural reforms, export growth, and sustainable FX inflows. If you are a short-term trader, focus on liquidity, official signals, and risk control. We fall squarely in the short-term category. Manage positions accordingly and do not conflate rumor markets with fundamental valuation. Now let us talk about communication, how you can read official signals. The clearest signals are formal press releases that describe both the rate and how it will be used operationally. Less clear but still meaningful are technical notes that describe the mechanics of how the central bank plans to buy and sell dollars to the ministry and to commercial banks. Statements about reserve levels, FX auctions, or limit changes are also direct signals. Silence or contradictory statements are also signals. Silence leaves room for rumors, and contradictory statements often signal a shift in internal consensus. For the coming week, prioritize official, operational details over broad proclamations. Operational details reveal intent. Before I wrap up, let me give you a compact checklist to use over the next 7 days. First, note the official budget exchange rate and any changes to it. Second, monitor bank communications on dollar availability and any FX operations. Third, compare the unofficial market quotes across multiple reputable exchangers before transacting. Fourth, if you are a trader, set position limits and use stop losses. Fifth, if you are a remitter or importer, consider splitting transactions to average rates and reduce timing risk. Sixth, be alert to scams and offers that promise guaranteed RV profits. Seventh, keep cash reserves to cover essentials in case of sudden conversion delays. These are practical, immediate steps that fit both individuals and small businesses. Finally, what should you do if the market moves sharply in the next few days? Stay calm and stick to your plan. For savers, avoid panic conversions based on headlines. For traders, cut losses quickly when a trade breaks your predefined rules. For importers and businesses, renegotiate supplier terms where possible and consider short-term hedges. For remitters, use formal channels if you require reliable timing. And above all, avoid acting on unverified tips. The next week will be noisy. The winners will be those who rely on clear rules, verified information, and disciplined execution. I will leave you with one last point about responsibility. The financial signals we are discussing have real effects on real people. News and rumors can move markets, but they also affect prices, wages, and livelihoods. If you are creating content or sharing opinions about an RV, consider how your words influence others. Provide clear caveats and avoid amplifying unverified claims. If you are watching this channel for updates, use the comments to ask for clarifications and I will follow up with detailed explainers. For now, keep the checklist handy. Watch the official operational signals and treat rumors as high-risk noise rather than certain outcomes. Thanks for staying with me through this full breakdown. Like, subscribe, and hit the notification bell to get the follow-up if any major official moves happen this week.